As of this week, the market's hit new highs. A lot of people don't seem to be singing and happy. Most of our institutional clients aren't sure about this recovery because they think there are still a lot of unknowns, like when the FOMC will make its decision, or when the tariff deadline will be. If investors aren't sure about the market, it won't reach its peak. They are at their best when people are too excited. That doesn't seem likely. The Fed is not cutting rates right now, but they will start cutting rates again once they are sure that the tariffs are not causing inflation. I don't know when that starts, but if the Fed becomes dovish, there will be more cash on hand from the central bank, which should be good for the financials. It helps small caps, which are very linked to that trade, as well as regional banks. It also helps the cryptocurrency complex, which is very dependent on central bank liquidity. Every time the stock market and the cryptocurrency market completely wipe out previous records. To be fair, Tom Lee is right. You guys aren't nearly as excited as you should be about that. That's likely because a lot of people thought there would be a lot more rate cuts this year, which would bring a lot more money into the markets. The price of XRP has a lot more room to go up because of this, and altcoin season is generally a lot more crazy because of it. That's what most people want to happen. Most people just want the Federal Reserve to lower interest rates so that trillions of dollars flood into the market and XRP goes through the roof. Today, we're going to reveal a lot of the hidden facts about this subject and figure out how likely it is that the Federal Reserve will act at certain times and points for the first time ever. I believe this is very important information for figuring out how to handle this bull run, and then do really well because of it. Now, hit the like button so that everyone in the XRP army can see the video. Let us hear what Tom Lee has to say. If investors aren't sure about the market, it won't reach its peak. They are at their best when people are too excited. That doesn't seem likely. They aren't wrong to be curious about the lack of certainty around those issues, are they? They're not wrong, but I believe they got the amplitude wrong. In April, people thought that the economy would crash if we didn't have a trade deal. Now, though, they know that if they're wrong, they don't have to jump off a cliff. There are diplomatic ways to solve problems and even ways to delay due dates. What do you know? $7 trillion in cash sitting in banks, and I think you need to really break up the sentiment of retail investors. I believe that Robinhood type investors are optimistic, but what I call high net worth and traditional equity investors are still being very careful. That's what our clients are all about. I would say that the speculation is I think it's way too early to say that there's speculation because those are such small examples. Because of these small events, the high beta ETF has been setting new highs almost every day. Not even junk stocks are in question. If you look at high beta as an ETF, it should usually lead in a bull market. That's why it's not strange. Momentum and should lead. But keep in mind that when Goldman uses that data from 2021, it was during a time when people were betting too much on these big Mag 7 and large cap names. There isn't much happiness in those stocks. Speculative excess, on the other hand, is when someone says something that isn't based on current facts, but they're sure it's true. That, my friend, is a speculative bubble. There is a bubble of hope that inflation will return. Some people think that we are about to go into a recession, which is a bubble. The conversation I have with clients about that is probably the most common one. Every Zoom I've done with an institutional account has started 5 minutes late because someone was like, "Tom, why are you ignoring all the risks? Don't you see that we could already be in a recession?" I believe that the fact that we are in a recession is the result of too much speculation. Bad things. Yes, just like there was a pessimistic bubble after the great financial crisis in 2009. There was a bubble that another financial crisis was going to happen all the way through 2019. It's a bubble of worry. Tom, that just didn't happen very often, you know. That's right. And the market has PTSD from trade and the Fed right now. The Fed is not cutting rates right now, but they will start cutting rates again once they are sure that the tariffs are not causing inflation. I don't know when that will begin, but if the Fed becomes dovish, there will be more cash on hand from the central bank, which should be good for the financials. It helps small caps, which are very linked to that trade, as well as regional banks It also helps the cryptocurrency complex, which is very dependent on central bank liquidity. Because of this, I believe that the banks, financials, small caps, and cryptos all move when the Fed gets tasty. Things have gotten better with the finances, but they still aren't expensive. This is because of another lever that is pulled. When rates go down, mortgages become more affordable and the credit cycle gets longer. Also, keep in mind that the ISM has been below 50 for 29 months. The ISM has never had a stretch like that before. I think, to add to Chris's point, I believe we have a cyclical recovery that is good for cyclical stocks if the Fed starts to cut rates. In the last 10 years, 15 million new households have been formed, but only 13 million homes have been built. There aren't enough homes for sale, and the problem is getting worse because interest rates are high. This is keeping home prices high. So I believe there is a problem with the policy. Another question is, if trueflation, the core PCE is 2 and the Feds are 4.5. Inflation is 1.8. For the Fed to explain why they keep real interest rates high, which hurts consumers a lot, is very hard. There are other things that can be done to slow down the economy, like putting all of these tariffs on goods and services that businesses buy. I wouldn't understand why the Fed should keep rates low if they told me that $400 billion in taxes are going into the economy. This is a great point that thinkdumly makes that a lot of you should really think of. Soon, the Federal Reserve will have no choice but to lower interest rates, or the economy of the whole United States will fall apart. High debt and extra stress on businesses will cause a huge problem in the financial sector, real estate, and pretty much the whole economy. And this includes small business loans, medium business loans, and so on. All of these different types of debt are being borrowed and lent by everyone. If this debt stays too expensive for too long, it will have terrible effects on the economy as a whole, which is something the Federal Reserve definitely does not want to happen. In the event that they don't lower interest rates and let it happen, it will obviously look very bad on them and could affect how long they stay. Gross. When I'm being honest, I think that even if something terrible happens and the Fed decides not to lower rates, that also opens up a lot of great opportunities, especially in the crypto space. We've seen this happen before, both in the past and in general. There is a big market crash, followed by a V-shaped recovery after these terrible events. This is a lot like the fear and panic about tariffs that we saw in the crypto market a few months ago. Of course, you're making a lot of money if you buy those bottoms. Take a look at how tariffs changed XRP, Bitcoin, and Solana to see what I mean. You are well into the green if you bought any of those cryptocurrencies near their all-time lows and are still holding on to them today. You have made a huge amount of money, especially if you used even the smallest amount of leverage. That's where I think that all of our minds should be then. If the Fed doesn't lower rates and there's a terrible event in the economy, let's invest in stocks when they go down. But let's just enjoy the ride if the Fed does start lowering rates and more money starts to flow into the markets. You need a plan no matter what happens. That's how investors make money in these markets, and I'm following suit. For your information, I'm not giving you financial advice in that sentence. That's not what Crypto Crusaders does. No matter what the markets do, we have a plan. You can join today if you want to find out for free what my plan is, what I'm doing, and the trades I'm making. There were no questions. Just follow our simple 3-step plan. First, you sign up for an account on one of my partner exchanges. Next, you make a deposit and send in your email address and exchange